Well, hello, Maverick traders. This is Rob Reinhold. And hey, it's nice to talk with everyone after a long holiday week off. I cannot believe it is already December. The year's almost over. So let's check in and see what happened today. After a really exciting day yesterday, big ranges, big moves, big everything everywhere. Today was definitely what we expected, which is a harami pattern. Whenever you see a large expanded range candle, where a lot of energy was expended, the most likely candle you get is a harami candle, which is exactly what we got. So when we check in on the news, the markets were flat. It was a lackluster day. And if we take a look at the numbers here, the Dow was down 0.5%. And most of that was from Salesforce issuing poor guidance. That was over 100 points of the Dow. So the Dow would have been virtually flat or down slightly. S&P down about 0.1%. The NASDAQ eked out a small gain. And the big story, gold. Gold and silver have all of a sudden come back into the picture and are now looking very, very bullish after just probably 3 or 4 weeks ago looking really, really lousy. The advanced decline line was slightly positive today at 51%. And if you can see here, 73% of all stocks are trading above their 50-day moving average. That is a bullish sign that we are in a bullish wave. Now look, as I said, a bullish wave. I did not say bull market. We think this is more of a bear market rally than anything. We need to see a lot more evidence before we can call the end to this bear market. Let's check in on the charts. So you can see here we have this little harami up here. We gapped up, we sold off. So overall, pretty much a flat day. At some point, we were up pretty nicely and it sold off. We were down at some point pretty nicely and we bought back up. This is really the day that we would expect after this monster candle that we saw yesterday. We know there's going to be some resistance in this 410 area. We knew it was going to be in this 410, 411. Boy, that is a terrible line I just drew, but you get the picture. Somewhere around here is going to be some resistance. So we would expect this resistance to probably hold for the next little bit. On the downside, we're probably looking at 40 on the S&P, 406 on the or 404 on the spiders. We think at this point we're probably in this little bit of range. The market is telling us the next move is likely higher. Until we get a break below these certain lows, this low here, really, until we break below 3,900 on the S&P, I think you have to say we're at least sideways to higher. As I said, we are definitely not calling the end of the bear market, but we've been pretty clear that once we started to work up above this 50-period moving average, you had to say that this down wave was over. And we're likely going to get either a sideways or an up wave, and it looks like we're getting a slightly bullish wave higher. Checking in on the NASDAQ, we've been saying that the NASDAQ is likely to underperform, and it definitely has been. Take a look at the difference of this little move higher. Where the S&P was up and moving up in here, we are really lagging here on the NASDAQ. At this point, the NASDAQ has broken out. We had a nice little hold here. The question is, okay, where is the next little bit of resistance? So I think we got to take a look, maybe even at 310. That is a big move on the NASDAQ. I don't know if we'll get there, but at this point, prices do point to slightly higher. If we take a look at the internals of the market, we talked about how they were pretty mixed today. Salt and pepper all over, green and red. As you can see here, nothing really stands out to you other than the big weakness in the banks. JP Morgan, Bank of America, Wells Fargo, all got hit pretty big. Outside of that, this was a really mixed day. Exactly what we would expect after an expanded range candle, to have a mellow day where we chill out and wait. So let's take a look exactly where we stand here. We talked about the S&P. We are above the 20-day moving average. We're above the 50, and they are now both starting to move higher. That 50 is just early in its turn, but you cannot argue that this is more bullish price action than bearish. And I talked about 2 weeks ago when we were back in this area, and I said, look, you may feel bearish, but you have to be bullish. The market is telling you to be bullish. You still may feel bearish. I get it. It's very easy to feel bearish here. Things aren't going great. But when you look at charts, the charts are telling you you need to be more long than short. So that's where we are. Until that changes, everything else is just your opinion, my opinion, everyone else's opinion. And we could talk about it forever, but when it comes to trading, the chart says be more bullish than bearish, period. So that means we're going to be where we are. We are at a +2. We've been at a +2 for about 2 weeks now. We were at a +1, and this is going to be more of a +2 week once the week is said and done. If we're taking a look at specifically tomorrow we do have the jobs report. So this jobs report could make the market jump up or actually get back quite a bit. We're going to have to wait and see what we see in the jobs report. I'll talk about that right at the end of this video. Let's take a look at a couple potential trades. Lots of things looking great on the bullish side. What we are focused on in Maverick is relative strength. We want to find stocks that were going up when the market was going down and are now going up when the market's going up. This is a great example of exactly that. This is Nutanix. This is a technology software company. And you can see here, while the market was tanking in September and October, this thing was going up. And now that we're breaking out, this is just a beautiful breakout to the upside. I don't see any reason why this thing doesn't get to 32. Now, I'm not saying by tomorrow. I'm not saying by next day or two. But I think if you have a December expiration, so basically about 2.5 weeks away, I think 32 is a great target to set up some trades on Nutanix. Next one here is Royal Cruise Lines. Now, RCL, great looking chart. Same thing. It did have a hit in September, but remember, the market bottomed out in middle of October. This thing was already climbing all through October, had a monster October. And here we are, we've just high based, and now we're looking to break out. Yeah, we've got a long upper shadow on today's candle, but if you give it enough time, I don't see any reason why you can't at least get 62, 63, if that's where you want to set up your options trades. If we are in a little bit more bullish situation, I think you could take a look at 65 to maybe even 70, but I just don't think we're there yet. We're at a +2. We're not at a +3 yet. I think you need to be a little bit more moderate on what you ask your bullish trades to do. That is Royal Cruise Lines. Looking at a sideways trade, this is Costco. Costco had some disappointing same-store sales numbers, and it had a down day. This is what I like. When I take a look at looking at some sideways stuff, condors and butterflies, I really like stocks that were strong and then they missed and they got put in the penalty box. Target is one that I've been playing lately from when they missed their earnings. They got slammed and then they have to sit in the penalty box. The market is now bullish, and so if this was a bear market, this thing probably would tumble quite a bit more. But the fact that we're in a bull market, people are optimistic. This one is likely just going to have to sit in the penalty box. So I like it right here. I like a 480, 500, 520 butterfly. So basically directly neutral. And I think you're looking out to the December expiration on that trade. This does have weeklies, so you could easily just do a 1 week trade, 1.5 week trade, anything you want to take a look at. And on the short side, this is Vermilion Energy. So this is in the oil sector. And I really like this chart. Oil was just absolutely decimated over the last 2 weeks. It actually had a big jump today. At one point, it was up 3-4%. Oil closed up 1% on the day. But this is what I love. I love when oil goes up and this energy stock goes down. That's a really good sign that tells you it wants to go down. Can you imagine if energy was down today? This thing would be down 4, 5, 6%. We've got a nice bearish engulfing candle. We just need a confirmation candle tomorrow, and this one is ready to go. That being said, I think you have to take a look at this 1820 area. There is a big, big band of support right here. So if you're looking for anything to really break down, I don't think you can look for like a 17 target. I think a 1920 bear call spread is what you want to look for doing. I know that's a very wimpy trade. That's all right. We like wimpy trades here at Maverick with high percentages. So you're probably going to get about 30 cents out of this. It means you have 70 cents of risk, 30 cents. This is almost all theta here. We just need a little bit of a down move for this max gain. If you're willing to give it more time, I think you can go to a target of 18 or 1750. But I think if you're looking just over the next week or two, I'm just not that bearish. And I'm not that bearish on anything, so I want to be very moderate on my bearish trades I make. Let's talk about tomorrow. Tomorrow, it's all about the payrolls report. Expectations are for 200,000 new jobs, 3.7% unemployment. Okay, we are still in this area of good news is bad news and bad news is good news. If this number comes out at 300K, it is bad news. The market will not like that because it means the Fed is going to be more aggressive, and the market is rallying on the hopes that the Fed is going to be less aggressive. If this number's hot, we will get back some of the gains that we had on Wednesday. If this number comes in around 200,000, you need to understand this is actually a low number compared to what we've had all year long. We've seen 3, 4, 500,000 new jobs a month. 200,000 3 years ago was a strong report. Now it's actually a weak report compared to what we've seen lately. 200,000 or lower, I think the market is absolutely fine with it, saying, hey, it's cooling off, and it's going to allow them to say the Fed is probably going to back off. We'll see what happens tomorrow. Expect a big gap up or a big gap down starting at 8:30 a.m. Eastern Time, an hour before the market opens. You're not going to see a flat open tomorrow. We're going to be having a big jump off of this report. Thank you so much for joining me. This is the Market Roundup. Take care. Goodbye, everyone.